Hey there, ladies and gentlemen, this is Dr. Greg McLeod from Elite Traders University. It's time for our Forex analysis, Bulls versus Bears weekly Forex forecast. And I'm so excited about this week. This is the first week of December. December, where does all the time go? 2024 is just gone out the door in 2024, and we're going to be alive and thriving in 2025. So I'm going to share my screen and let's get to it. This is brought to you by Elite Traders University, www.elitetradersuniversity.com. The best place to learn how to Forex scalp the market, to compound your small account into a large account. Use my proprietary system. Okay, let's get right to it. Bulls versus Bears weekly Forex forecast for this week, the first week of December, December 3rd. This week, it's we got non-farm payroll coming up and look some other things in the calendar. Let's take a quick look before we get started. I want to direct your attention to the risk disclosure on our screen to make sure you understand all the risks associated with foreign exchange trading. All right. And I've been doing this for a long time. I'm a currency analyst for one of the largest Forex brokers in the world, currency analyst, and I am the CEO and founder of the Elite Traders University. All right. And the founder of the Pip and Run Forex scalping system. Okay. Let's get to it. We're going to, and also I authored the Gold Rush Blueprint, and I wrote a best-selling book on trading gold and the gold trade system, the Gold Rush Blueprint. You can always you can scan the QR code to learn about how to take advantage of the rising gold, the highest prices ever been in history, and the ongoing the melt up of gold. Okay. We're going to talk about the US dollar index, euro dollar, pound dollar, the majors. We're going to also cover the indices, and we're going to look at some economic news first. Okay. Actually, we're going to start. We're going to start with the US dollar index. Here's the US dollar index. Hopefully, I'm sharing my screen. I am. Oh, we are sharing screen. Yes, we are sharing. All right. Okay, sharing is carrying. All right, here we go. Higher highs and higher lows. We have this. The dollar index is a very strong barometer of how we trade the market. If we understand where the dollar is going, we understand where the other major currency pairs are going. Our major currency pairs, the Aussie dollar, pound dollar, Kiwi dollar, dollar CAD, dollar yen, and dollar Swiss. And so we can see that we have a nice upward trend on the monthly chart, walking down the weekly chart. Nice little bounce. So we had a low about the 100 mark, got a high of 108.13. We're off the highs of 2023. Now, what's really odd about this current rally in the US dollar is we're in the middle of a rate cut cycle. The Fed has been cutting rates, yet the dollar keeps going up, right? And it's possibly due because of the great faith and confidence in the U.S. Financial system with the election. A lot of people were fearful and waiting, thinking it's gonna be riots, gonna be this, gonna be that. And the relief rally, this flight to safety, it's kind of interesting. The dollar's rallying and the stock market's rallying. But again, we have these anomalies when we have a really pent up uh, you know, uh, uncertainty in the market. We moved sideways for a long time, and then we broke out, and really the confidence in the U.S. economy. Not perfect economy. We do have some inflation, but this is a vote of confidence for the U.S. dollar. Okay, so let's go ahead and let's look at the other currencies. All right, we'll take a look at the dollar yen. Dollar yen was on a tear too. But you can see we've made a lower, a couple of things. We had a rising uptrend on our chart, right? And but then we're making a lower high. We have our lower high, but we haven't made a lower low. We made the same low. We had a double bottom, but now we have the makings of a head and shoulders pattern, which is bearish. And usually if the yen starts rallying, it's usually a kind of a sign of some type of maybe gloom and doom, maybe. Um, so I mean, we've been topping at this area, and so we have been unable to get, 162 was a high, and we fell short of that failure swing. Daily chart, you can see we've been we moved below the 200 simple moving average, and looks like we could come back down to support. Trend line support comes in at like 143.29. Currently trading 149.81. Our roaring uptrend has been stopped at some Fibonacci resistance. Right, we got to the 786 Fibonacci, and then the price is just turning around, and we're probably looking at even coming down to the 140.26 area. What could spawn this with having the yen getting strong during the fall season, which is usually the season in which the yen is usually much weaker? Could be a possible raising of interest rates in Japan, or something more ominous ahead. Okay, so we'll have to wait on seeing that. But the Bulls versus Bears, I'd be bearish on the dollar yen. Okay, um, so it's not really in the dollar yen is always like an odd one. It's not really following the trend of like dollar strength here. Those are like dollar Swiss. Here's a dollar Swiss, this monthly chart. Dollar Swiss. We're recovering off of some lows here in the 83.80 area. You can see nice double bottom, price rallying down and then retesting the low. And we've got this double bottom pattern, which is short-term bullish, right? And it's in line with the current dollar strength. And then it's the opposite of what's going on with the euro. And the euro is considered the anti-dollar. And I kind of skipped that for some reason. I don't know why I did that. Subconscious Freudian slip there. But we can see a move back toward 92.32. And we're at 88.40. So it's about 400 pips, forecast. That's what we're looking at, up an uptrend from bouncing off these lows. Maybe getting the back up in here. Okay. I'd be constructively bullish dollar Swiss, walking down the weekly. And you can see that we are maybe, taking a little bit of a pause, a little bit of a break, but at the 200 stuff moving average on the daily, we should be able to resume this uptrend higher. Okay. Okay. On the other hand, we should take a look at the euro. There we go. So here is the euro dollar, and we can see the monthly chart is just falling out of bed, just dropping. I know. Big shout out to Dirk, Pip and Run Master on the YouTube. This was the double top on the euro, and I guess my YouTube short kind of cut that off. And here we go. That's our double top that we had on the monthly chart, monthly rejection, and it was pretty strong there, and push south side. Right, so we can see a retest of support. We might see a push back down toward the 96.38 area. So this looks Bulls versus Bears. I'd be a bear of this pair. Hey, okay, let's go ahead and change the color on that. Yeah, so it's like red, right, or peach. I don't know. What's that? There you go. There's a nice regular red. Yeah, we're just dropping out of bed there. We got a little bit of support here. We're kind of pulling off of this 105.29 area, but let's walk it down to weekly. You can see how it's like sitting on that support daily chart. And now we're seeing a little bit of break. We got a nice little trend line break on the daily, and that could be our candle for the rest of the week to start pushing on down back toward this 96.38 area, which is a long way away. It's almost like 900 pips away. But there is nothing, with problems going on in France, problems in Germany. There's just not a lot of good news. We got the war raging in Ukraine. We're steps of World War III with, Ukraine has said that they want to have the territory that they have under NATO, which would be disastrous, which would mean that if a NATO ally is attacked, then the United States will be in the war, be drawn into an endless war. And so, the European Union is in trouble, and I'd be a seller here, right? Don't buy. Okay. Let's go ahead and move to the pound versus US dollar, right across the pond there, right across the English Channel. Go to our monthly chart. Similar story, where we had lots of support. Get rid of all those support lines there. Move drawings, and we can see that we had a slightly higher high, but still, maybe create some type of a wedge. And then we had we had rising support. We broke it, and looks like we're coming on down too. Um, looking to retest previous support. Came in at 103.68. That was a low that we had on September 1st, 2022, right? And it's invalid. If we break above the high, the one spot 3451, then we could probably see a move back toward the old highs and the 200 moving average coming in at one spot 4237. Right now, we've got a big market tide push down on the monthly, kind of slowing down here, but now we got one candle break here, but this could be our signal for our continual drop in the pound dollar. I'm actually willing to take a shot at it for a move. We're trading one spot 2650. Look for a move back to one spot 2491 in the interim. But I think ultimately we'll continue to move on down to that low of 103.68. That was our Queen Elizabeth, but she passed away. That was the low, and we could see a retest of that low. Okay. So again, the dollar strength very strong, and we see other markets getting hit. Australian dollar, remove all drawings here, and go back to our monthly chart. And looks like we got a little bit of a same kind of story. You can see multiple. We're just stacking on the way down. They're just walking with these new lows, just new lows, rally low, and then we've got this try find a base here, and it's not working. We have this low here, our 2020, our COVID low, 54.97, and we're just, the bears are just backed up against the wall. Every time they try to push, bulls are backed up against the wall. Every time they try to push up, and they're pushed back to this level here, the 63.45. If this breaks, then there's a lot. This is like an air gap. We can see a giant collapse in price down to the 54.91 area, and that's 1,000 pips, guys. But this looks extremely bearish. Looks like a bear flag pole, and then we can see an extension. So that and it's really, like I said, unusual. Now we do have an FOMC, a December meeting coming up, and if Jerome Powell says that maybe we won't cut rates any further, that could really cause all these other pairs to sell off. So Aussie dollar, look for that dumped. Kiwi dollar, same thing. It's just right across the Tasmanian Sea. We have this kind of this hockey stick kind of a bear flag pattern. We have the pole, and if we clone that and use this a price extension, we could get a further deeper move. We could probably retest these lows here that we haven't seen in a long time, right? 49.82 neighborhood or so, call it 4,900. And so we could without any type of takeoff or lift, I mean, we've got a downward trend line below the 200 moving average and a strong dollar. Weaker Chinese economy. Kiwi and Australia benefit from a strong Chinese economy. Chinese economy is still very, very weak. Property sector is very weak, and so that's having a direct impact on China being their largest trading partner of New Zealand and Australia. And when China's economy catches a cold, then New Zealand and Australia are going to catch the flu. Okay, they're very dependent on China, and China's not doing so well, and you can see it in the chart, right? I mean, we had our high July 1st, 2014, and we were some like almost 3,000 pips off the high, and with more to go to the downside. So we're looking at this old low to be retested, and that give us a very good risk to reward if we were taking this to the short side. And I'm not a trade recommendation, but I'm looking for areas where I can get short, but it's a very tight stop. Looking for a nice, big six to seven to one risk reward. If I were, a long-term trader, I'll probably just scalp this short several hundred times or something like that. Okay, let's go ahead and switch to the dollar-based pairs, and we did see the dollar yen already, dollar Swiss already, dollar CAD, and dollar CAD is on a tear to the upside on the monthly chart. I mean, we're stuck in a big range there. Oh, the lows coming in at 120.21, lows we had in 2017, another low 2021. We also have a pair of highs. We have a pair of highs at the 146.41 area, the high of 2016 and the high of 2020. So it's like it's alternating highs and lows. So we're really stuck in a really big range. After touching down here, we might see a push back up to the 147 area. We're currently trading at 1.4038, looking for a price to continue to move higher toward that upper resistance area. And I'm gonna change that color there. Bulls versus bears. I am bullish the dollar CAD. Dollar CAD is also correlated to the price of oil. If Trump can negotiate some peace over there between Ukraine and Russia, they have a ceasefire. They have a ceasefire going on right now in the Middle East. If that ceasefire holds, and if we have peace in the Middle East and peace in Europe, then also a slowdown in China with if their economies are slowing down, they don't need as much oil. If they don't demand much oil because of slower economic activity, then the price of oil goes down by supply and demand. And given that Canada is our second largest supplier of oil, weaker oil fundamentals going to be a drag on Canada. That's why Trudeau got on a plane, went down to Mar-a-Lago, talked to Trump, because a 25% cut with a reduced oil consumption, it would spell economic doom for Canada. So we could see the Canadian dollar weaken against the US dollar. And so we can see the geopolitics playing out in the charts, right? Okay, so let's take a look at all the currency pairs, the major ones anyway. We'll take a look at gold, and we'll take a look at gold. Gold's back up there, 26.46. Strong bullish move, higher highs, higher lows. It's been stalled out the last 3 months. Haven't been able to breach that 27.8038, the high that we saw back on October 2024. Let's go to the weekly chart, and we can see the pullback against the trend, which gives us an opportunity to look at longs in this market. This is what we're looking at. We have a pennant in an uptrend usually breaks to the upside, and we see a repeated habit of a pennant in consolidation leading to a breakout, right? So I wouldn't be picking tops, here, but I really look at a continuation of this bullish trend, the highest price that gold has ever been in the history of the United States, probably in the history of the world, right? This is historic, right? We go drop it down to a daily chart. We had a nice bounce. We had a low of 25.34 back in November 14th, 2024. Nice bounce, pull back, lots of tight consolidation. Usually when we have tight consolidation, small body candles, these are daily candles. The ranges are so tight. Usually prices move from low volatility to high volatility. So it's like a spring. You used to have a spring and you press it, press it, press it, and then boom, you know. So we have this compression. So expect a big break to the upside. Look for a breakout. You get a breakout above 2650. We can race up to 2700 and lickety split pretty fast. A big shout out to Jay. Jay is a master gold trader, and you'll be seeing his testimony soon. And we've also got Rudy. Rudy is master gold traders too. Keelan, those are my gold guys. They just love trading gold, and they are very good at it. So it's a big shout out to my Pip and Run crew. Uh, and the new crew. I want to welcome also a big shout out to Chris and Paul, and also my newest Pippin runner, that's got coming on board, and I'm really excited about everything that he's gonna be able. His name is Toby from Australia. Big shout out to him. He just joined Pippin Run, and also Jemmy from Singapore is going to hop on board too, and Nick. So, if the Black Friday sale, a lot of people rushed at the last minute, begging, please, Greg, let me in. I want in. I'm like, no, you snooze, you lose. And I'm like, come on in, no, thanks, Greg. You'll never, it's like, come on in, just make some money, so if you haven't taken advantage of the Cyber Monday, Black Friday. I'm black. It was Friday. Now I'm black and it's Tuesday, right? So if you want to, this type of an 888 in the comments below, let's book a call and get you a payment plan and get you in and have you start making some money. All right. Anyway, back to the charts. Let's look at BTC. I haven't looked at that in a long time. I'm bullish. I'm so bullish. This is a Toby Crable NR 1, 2, 3, 4, 5. This is a 5 range narrow but band. This is gonna blow up so big, it's gonna be huge, right? It's gonna be huge, right? You'd be going like this. Okay. Anyway, let's look at BTC USD, and then we'll look at the indices. Where you futures guys, you're back to the future guys. Like, come on, And here we go. Here we go. This is our monthly chart of BT. It's incredible to have something that's this almost 100,000. This is a big candle. For those of you who didn't believe in Bitcoin, it's like a big middle finger going, take that, Like, if you bought it at $9,000 and now it's $96,000, that's amazing, huh? And the thing about it, if you buy it now, it'd probably be 150,000. Um, but you can see nice consolidation, narrow bar consolidation usually leads to a massive breakout, right? Small body consolidation, breakout. Now we have a breakout, it's like, okay, now where do you get in? You get in, you get taken out real quick, right? So look at the weekly chart. We can see it's a strong uptrend. It's going to be, I know I scalped some South Side trades, and a big shout out to Antoine, one of my top students. He was able to do some shorts on the you play both sides of the game here. If you get down to a smaller time frame chart, you can see that you get made up some butts on the pullback, a little pullback there. But you got to remember that if you're going counter trend, pro tip: don't overstay your welcome. Okay, bulls get fed, and bears get fed, and pigs get slaughtered. So the moral of the story: don't be a pig, right? Get in and get out. Oh no, I'm going to reverse the gets crushed. Right? Oh, please come back. It's not coming back. Anyway, we do have here some consolidation. 1, 2, 3, 4, almost 5 days of narrow range consolidation. Right? We got a little rectangle, and we just been unable to break out of this, into that 100,000. That's almost a psychological. On the futures side, we hit 100,000. I think, did we hit 100,000? Nope. On the futures, we did, but not on the spot. The spot market and the futures market are different. Spot is the current price. Futures, what the paper, almost the paper, the paper contract um, value of the underlying, the derivatives. Okay, just think of derivatives. Okay, so here we go. Daily chart consolidation. Gonna be difficult to get long here because you're gonna get jerked out or you're gonna face some drawdown. So you really want to wait for this kind of to like see, look at this narrow range of small body candles, just consolidating, right? You got people selling, getting out, some people buying. We dipped down here to the 90,000, buyers stepped in, some sold, some bought, some sold, some bought. So this is like an accumulation channel. And when all the supply and this levels are gone, and then you get your dark pools, you got these guys, high frequency traders looking for liquidity. Boom, you'll get these little spikes up, and then you'll start gunning for stops. The guys who are short will start gunning for their stops. And we can see this thing break that 100. But probably they've got options. They probably got all kinds of put options, sell, some our spreads and all kinds of stuff. So, sophisticated option strategies to take advantage of this narrow range, this low volatility. But once this thing breaks out, then that's we always have low volatility precedes high volatility. So right now we're in kind of a low vol, low liquidity, first week of the month, non-farm payroll coming up on Friday. And they'll give us those funny numbers, and that'll lead to some type of a breakout from this consolidation. We might see, so I am constructively bullish, but I want to see a break above 98.66. What accumulating small positions here, and building a base. The wider the base, the higher the race. So we get this long base, and then we get this race. Okay, let's look at your future things, right? I call them thingies, right? But Greg, you trade these? I trade like now, and then I'm done, and so I'm not gonna get up at 8 o'clock in the morning. So I have but I have students that really that crush this. Um, and we had look multiple tops here, you know, uh, let me get to the monthly chart. No, first of all, that's huge, right? Look at that. That is huge. Just breakout from consolidation. This is a breakout from a huge pennant. This is your little pennant formation. Nice little that. So you got it's hard to draw that, right? Not pretty, but it's a roaring, very strong uptrend with very little pullback. And so if you get dips in it, it's we're just skyrocketing. We're currently at 44,971, all-time high. Back up to a weekly, you can see what it is, just stacking with slight pullbacks. Here's our daily chart, and we can see nice pullbacks against the trend, provides nice buying opportunities. Buy on the dips. There's your dip. Lots of opportunities, right? But as you notice, the dips are getting shallower, getting smaller, and it could be fatigued, and maybe you get a bigger correction. But so we are our trend could be getting ready for another dip. Let's drop it down to a 4-hour chart, and you can see that we have not gone anywhere for a while. And usually, because we've got a trend channel. Try that. Say that 10 times fast. Trend channel, right? I dare you. Say it, right? There we go. So there's our trend channel down up there. We're at the top of the channel, right? So if you buy the top of the channel, you're probably gonna get smoked, right? Because it's gonna drop, right? So you gotta don't get FOMO. Wait for this to come back down. Maybe come back down to that 43.66 area. Ideally, you want to touch the trend line at 43.24, and let's ride this back up again, right? That's the whole idea. We get this rolling. If you're old Wade Cook fan, it's like rolling stock. This is a rolling channel right there, rising. A range rider. That's what he called it. Range rider up. So this is our range rider. It's riding the range up. And then, but we want to get it on the pullback. So that's our YM. Let's look at ES or S&P 500 mini futures. And the same kind of thing. Oh, look at this. Just a rocket straight up. I mean, where have you seen price action like this? We go back to like 2000, 1990s. We had some runs, but not like, look at these runs, this long, strong runs, right? Again, the bulls are in firm control of the risk-on market. And don't be a hero. Don't jump on top of the hand grenade. This is gonna blow you up if you try to short it. If you're gonna short for a short time. But again, this is also a range rider up where it's following a range, dropping and rising and dropping and rising and dropping and rising, right? So we've got again, it's not, you could play a short, but I would just wait for a position. I would wait for it to come back to the trend line and get back long again. Don't be a hero. Don't try to pick tops and bottoms if you don't have a top and bottom picking system. All right, so here we go. So we're currently trading at 6,663. Not, but notice how we're not getting very strong moves up. It's kind of teetering, like we are going to get a pullback, and trends do get old. So I would be neutral on this. I wouldn't short it, but I definitely would be cautious about getting long. I mean, you could drop down to make a 30-minute or a 15-minute. You might be able to find some small scalps. But that's a topping pattern, and so we usually see some type of a pullback. And so again, even though I wouldn't short it, I would wait if I can get it here at the 6,056 area or even 6,652. That would be a lot. I would feel a lot more comfortable about getting into this. But that might be all we'll get. A push to the 23% retracement. It just bounced off that, jumped, bounced off this. You got Pinocchio bar there. Yeah, it just seems like you're running on thin ice, right? Let's look at NQ. Let's look at the Nasdaq E-mini Nasdaq futures and CME. And this is also kind of like biding its time, not really doing a whole lot. 21,007 stacking candles. And we had a high on November 1st, 2024. Pull back a little bit. Let's go back to a weekly. And you can see that there's nice, just barely uptrend. This very, very, very bullish there. Again, we're multiple days hitting the same area and not really going anywhere. That's usually a sign. Change of momentum usually precedes a change in price, to change of direction in price. But if you go to a daily chart, we're in an uptrend. We bounced off a trend line and we are making it up. But are we gonna make new highs? I mean, we've all-time highs, or making that's the question. To be or not to be, that is the question. 4-hour chart, and we can see we're going to run into some resistance here, but when we break that 21,357 area, that's you have to, if you're going to get in there almost like a scalp. I mean, this is not really, it hasn't gone anywhere, right? We do have a flat, high and tight bull flag. We got a flag pattern where this is high and tight, not pulling back to like deep Fibonacci's or anything like that. And usually a high and tight bull flag is very, very bullish, right? Non-farm payroll could be the trigger. We're going to take a quick gander at the economic picture and see if we can get a blowout here. I'm looking at the possible. This is a high and tight bull flag. Well, then I would look at cloning this and seeing a breakout outside. I mean, I'm looking at 21,561 on the if we get some type of a catalyst that gets us out of this range, which has been going on for a while. And so we can see this form as a pattern. It does this periodically. Look, see there's a high and tight bull flag high, and then it's very tight, and then breakout high, and then it's tight, and we're stair stepping. So we might see a similar pattern here on a break of 21,256, and we can see a bullish move to the upside, right? Okay, so I hope that was helpful. Let's go to my market heat map. Arrangement of currency pairs or percentage change tells us what's hopping, what's popping, what's dropping, and what's not. And if you go to the front to mymarketheatmap.com, you can actually see one of 6 powerful heat maps. There are heat maps for crypto, and also for crypto majors, and for stocks, and for all instruments and things like that. So we can actually, at a glance, I can see what's going up. Well, silver is up 1.17%. The JPN 225, Nikkei 225 is at the very top. Very bottom, we can see what's going down. We can see Litecoin and Bitcoin Cash is dropping. XLM is dropping, right? And there's a whole bunch of stuff that's gray that's not really moving. Either the markets are closed or there's not a lot of interest in it, right? So green is an uptrend, red is downtrend. Someone asked me, well, how does the heat map work? I was like, yeah, green is up, red is down, gray is stay away. Yellow, some guys are like looking at it and they're like, yeah, not really, right? Okay, so anyways, like $19.99 per month, and you can it has a very cool tool. There's a built-in economic calendar, which we're going to take a quick look at with the time that we have remaining. And here we go. We've got to switch it to, I always filter it to just the major countries and major, the ones of the major pairs we trade, right? And so we've got, for Tuesday that's coming up, we have the JOLTS job openings. We have lots of Australian data coming out tomorrow. So the Australian dollar is going to be in play. I'll look at that pair for trading. Definitely, I'll probably more favor the shorts are favored for that, as we looked at the technicals. We did the technicals first this time, guys. So it's let me know how you like that. Let me know in the chat box how you like me covering the technicals first and then economics last. Now you guys might want to tune out or whatever, but very important stuff. Wednesday we have ADP employment change. They're expecting a drop in jobs from 233,150. That's the private payrolls. ADP, they're a paycheck printing company, where I used to work for the brokerage. ADP printed my paycheck, right? They don't cover the governmental paychecks, and if Doge takes control, there's probably going to be a lot fewer government paychecks to count. Okay, Fed Powell is going to speak on Wednesday as well. Balance of trade, a lot of Swiss unemployment, Canada trade balance, initial jobless claims supposed to rise to 213 from 215. IV PMI, GDP out of Europe supposed to actually rise from 0.2 to 0.4, and year-on-year third estimate of GDP growth is supposed to rise from 0.6 to 0.9. That's good news for the Eurozone. But then Friday, the most important economic event in forever, for the whole month of December, is going to be non-farm payroll. And non-farm payroll is the U.S. employment number. It really, it's all it counts all the jobs that are being created, and that usually has an impact on currencies and stocks, because if people have jobs, they can buy stuff. And if they don't have jobs, they're not going to buy stuff, and so things start going wacky, right? So let's see what their estimates are. Now, they've been under fire because their numbers been kind of fake for a long time, and they say the unemployment picture is a lot worse and fewer jobs are actually being created. And so we'll see if the numbers are going to come out and how much people are even going to pay attention to the numbers. But it's usually one of the most important economic announcements that traders from around the world watch. Non-farm payroll. If you don't know what it is, look it up. Non-farm payroll. I've got some videos on that, on how I traded it. But it's very, very important. So if this is your first time hearing and you're a trader, you are you're an amateur hour if you don't know what this is, okay? It's at 8:30 a.m. Eastern time on Fridays, the first Friday of each month. The first Friday usually is the first Friday, which is coming up. The first Friday, which is December 6th, we're going to have non-farm payroll. They're expecting a rise in jobs from 12,000, which was totally anemic. Very, usually in order to keep the economy growing, we need to have over 240,000 jobs to be created every month. And for the month of October, when we create like 12,000 jobs, right? So now we're going to see what the November is supposed to be 195,000 jobs. That 12,000, there was a strike, there was some layoffs, there was some Boeing laying off workers and things like that. A number of things were going on that contributed to that 12,000 number. So 195,000, and then you might have some of the the election people who were hired for the election are going to be unemployed too, right? 195,000, and so that's a lot better than 12,000. But the revisions is where they really get us. And to look at revisions, I like going to a Forex factory. Um, that's like another site that has economic calendar, and but if you go to their Friday, go to the 6th, and yeah, okay, and we look at we can see if there's revisions, right? Usually there's revisions that are coming out. They're not farm payroll. They said it was 12,000. They're saying it's going to be 202,000, right? And they give you a nice little chart here that kind of like kind of shows you that was COVID, and this is where we are right now. So we're back at roughly trend line growth. It's actually negative. Okay, interesting. Yeah, under that's non-farm payroll. Okay. Well, guys, so we've got the week, you've got the technical levels and the things I'm looking for. I'm still looking for increasing dollar strength, and looking for the stocks indices to continue higher. And looking for possible breakouts in Bitcoin and gold as they consolidate. Now, remember, we have a couple of things here. You get a free masterclass. Come over to Elite Traders University. We have lots of free resources to help you become a professional trader. I have an income boost blueprint that's absolutely free, and it gives you inside detailed explanations, tips, and resources, plus valuable discounts on trading tools and services. Get your copy today. You go over to elitetradersuniversity.com, income boost ebook, and just pop your name and your email address, and I won't spam you, and I won't sell your information either. I don't know how to do that yet. No, I don't sell your information. And also, you want to check out my market heat map, come over to mymarketheatmap.com and sign up for $19.99 a month if you want to take a quick gander at that. Also, you want to check out our free Facebook group that just disappeared when I went there. Right? There we go. Come on. Oh, yeah. This is the live Forex day traders den, how we effortlessly pull out daily profits quickly without stress. And so we have a community, and we put trading tips. There's Jimmy with his wins. He's making money off my free stuff. He's just enrolled. He was making his money before he enrolled. He made enough money to actually enroll in my course. Can you believe that? That's pretty cool. And so there's all kinds of tips and highlights and videos, and we do special. I do every Thursday. I do a Thursday night live training, and we also have trainings and courses here as well under the guides. If you sign up and go over to guides, hey guys, go to guides, click guides, and there's 28 trainings, live trainings here, or not live. They were recorded. They were live, but they were recorded, and lots of titles. There's 28 videos here. Okay. So anyway, I want to thank you so much for being part of the group. Remember to click the link below. Type 888 if you want to a last chance at the Black Friday sale. Again, on Black is actually Tuesday. But I love you guys. I wish you all the best in your trading. Peace and pips. Talk to you later. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!